Hello there, and welcome to the weekend video. It's myself, as usual, and let's just, I suppose, dive right into it. We had the election results from the UK yesterday, and yeah, much to do about nothing really. Um, the wave count seems to be kind of traveling along, doing what it was going to do anyway. Okay, let's start right there. We'll start with the FX market and then we'll move on as usual. So here's the euro dollar 4 hour chart. This is the pattern, the larger pattern that I'm working with right now. So off a possible wave 2 in blue there, we're moving down in an A, 1, 2, 3, 4, 5, some sort of a wedge, or it might be a 1, 2, 3, 4, 5, or even hard to count that really. But for the moment, we still have a three-way pattern to the upside um, in play in a second wave. And it looks like we'll probably hit that 112.50 mark that we've been talking about. And wave C here, that's an A, B, C pattern. And wave C here seems to be extending in a five-wave pattern itself. So let's get into this wave C here to kind of break it out and see what's going on. Okay, so yeah, here's wave C. There's that larger A, B, C pattern, and you have 5 waves up in one, A, B, C down in two. Looks like an extending third wave. It could get another pop to complete that third wave, maybe. As that could be like 1, 2, 1, 2, 3, 4, 5, 3, 4, and 5 within wave 3. So we'll see. That could be a third of a third wave. That's spike higher. Mm, we will see on that one. Kind of jury out on that one for the moment. For right now, we could call that the top of wave 3, and maybe we'll get some sort of correction sideways today, back below that kind of support level there. Call that support. It's kind of a double top there around the the wave A high. So we'll probably get some sort of a fourth wave develop here during the trade on Friday today, and then a pop higher up towards that upper trend line there. 112.50 is where I'm looking at with interest because that would form the previous fourth wave, or depending on how you counter the previous second wave, is really, uh, it's like a flip of a coin between how that works out. For now, I think we're still within wave 3 and 4, so next week would most likely see another pop up towards that 112.50 level Monday, Tuesday time frame, and then we will look for a turn down in wave 1 again to start wave 3. Short term, looking for some more upside. Longer term, looking for a downturn. So here's that 5-wave pattern. Here's a 4-hour chart and wave in cable. Actually, we go to the daily chart and cable. Looking at a wave 1 down off that more extreme high back in 2018. So that was back at 143.80. Possibly have 5 waves down, or it could be a larger 3-wave pattern. It's hard to know. If we're looking at wave 1 down, A, B, and C, and we seem to be topping again around that previous wave A high. So if this is an impulse pattern complete, then we should be turning down now. I think we have 5 waves complete here, which does suggest that at least be a short-term turn lower. If it's 5 waves complete in wave C, which I think it is, then it'll be a longer-term turn to the downside. Okay, let's get into dollar yen here. Oh no, sorry, hourly chart in cable. Okay, so we were tracking that fourth wave triangle here. So wave 3 high, A, B, C, D, E. And then we got a nice little small impulse wave off the bottom of that wave 4 low. And we've tracked higher in 5 waves off that high. That kind of spiked lower the other day, or Thursday. Turned out to be an expanded flat as we were kind of speculating. And I can get rid of that alternate count there now. And we did reach the high, that 133.80 level, which I was kind of I was suspect of. I'll grant you that I was suspect, but we got there, and it seems to be 5 waves complete. So if you go to the 4-hour chart, we have 1, 2, 3, triangle wave 4, and 5 waves up in wave 5. And this wave 5 here, if you go into the hourly chart, you can see that triangle wave 4, 1, 2, 3, expanded flat, 4, 5. We're falling again today, early trade. We'll see how that develops. Um, we'll see how that develops. I don't think there's any other way to view that at the moment. We've hit that kind of that target level. That it was an extreme target, and I have to say I did not have faith, but we got there, and now we should head lower again, I think. So let's see next week. Let's see if we can build 5 waves down again in cable, so that when the euphoria, the euphoria or the shock passes, and Mr. Johnson gets into his stride. Okay, next week we seem to have fulfilled the criteria for a complete 3-wave pattern in wave 2. So now let's look for the beginning of wave 3 down. Okay, 4-hour chart in dollar yen. It's really I'm not sure that this triangle is complete yet. This large triangle in wave B here. I'm not sure that's complete yet. I have a suspicion in my mind that we could be working in the short-term chart. We could be working at one higher degree. So I'll show that on the 4-hour chart here. So that's wave A in orange, wave B, and wave C down in orange. So let's get into this hourly chart and we'll see how that is working. The only other, I suppose, the only other interpretation here would be if wave D is only topping out now. Again, I mean, if this further new high is actually only topping out wave D again, and then we move lower into wave E. But yeah, wait and see. We're almost up to that previous wave. Let's call it wave C of D high there at 109.72. I mean, if we fall from here, well, then this count is still valid. But if we break to a new high, we'll just have to work with that again this evening. I had a suspicion that this was going to be a hard one, and my suspicions, at least, have borne true. The pattern that I'm working with right now is 3 waves down in A, possible 3 waves up in B, and then further fall in wave C. And like I said, you could move this up by 1 degree. You could call that wave A. You could call that wave B. And you could call this wave C. If we get a sharp move lower next week, we threaten that support level 107. If we break through that kind of area, we complete 3 waves down. We should at least expect a bounce off that. But this correction is proving very hard for me to kind of to make sense of, let's say, at the moment. So I'll just keep on trundling on until we can identify a positive end, let's say, of this this correction. Okay, let's go on to the stock market. We got a new high this week. Again, I think it's just an iteration of the larger pattern, and I'll just go through that here. So that's wave 5 of 5 of 5. And within this 5th wave here, so wave 4 in blue, a triangle, and wave 5 here. And within this 5th wave, we have wave 1, 2, 3, A, B, C, 4, and 5. And within wave 5 here, we'll go down into the hourly chart and we will pull out that pattern there. So I still think we are moving towards a horrendous cliff edge here, and I don't know, get out of the way of this crashing train. Okay, there's wave 1 and 2. And you have here at this 27,736, you have at the level of where wave 1 in blue equals wave 5 in blue. So here's wave 5 in blue and wave 1 in blue way back last year sometime. Okay, so let's get into the hourly chart and we'll pull this apart here. Now you have wave 5. Actually, we'll go to the 4-hour chart for a second. We did reach the other day, we reached equality between wave 5 here and wave 1 here. So you have wave 1 of 5 and wave 5 of 5 now at equality. Okay, so let's get into our chart, and that's this level here. Just update that now for the moment. I must have deleted it. Okay, wave 1 equals wave 5 at 28,225. Okay, so here's wave 5 in green, and we have wave 1, 2, 3. It could be a triangle there, or it could be some sort of running flat fourth wave. We're popping out to a new high today. Early trade, well, I suppose it's pre-market over in the US. It looks like 5 wave is complete. 5 waves are complete, and if we again, it's just a case of looking for an impulse wave lower. I wasn't wrong about this being 5 waves down. It's a pretty decent 5 wave pattern to the downside. It just turned out that it was a C wave of wave 4 rather than wave 1 down, which I was expecting. But I think sooner rather than later, this market is going to turn down and it's going to shock daylights out of people. Okay, so it's just next week again. It's just a case of being patient on my part because I am prone to jumping on the bearish bandwagon. Please forgive me for that, but we're close. We're close. Okay, move on to gold. Let's get on to 4-hour chart. Move sideways there. So 4-hour chart. We've got this long contraction in gold. Whether we have completed wave 4 at the recent most extreme low, or we are continuing sideways in a larger triangle, remains to be seen. But I think this is still a correction, and we will still see a rally in wave 5, at least a fifth wave. And I'm still not against the idea that this next move up as the alternate count. Let's get it in here. I'm not against the idea that this next move up will be at one lower degree, which will only be finishing wave 3 up. And especially if we get a serious turnover in stocks, I expect to see a pretty similar and serious turn higher in gold. Okay. So I have that initial wave 4 shown here, and a possible 1-2-1-2 pattern, and maybe even a further lower degree 1-2 developing. The other alternate count I was showing there, it may be wave A down, wave B, or sorry, B, C, D, E, some sort of continuing triangle pattern that kind of falls by the wayside slightly when you look at the relationship between the internal waves of a possible triangle. But again, it's not impossible. For next week again, we haven't got that bullish breakout, but again, I don't think we're too far away from it. As long as we have the continuing higher lows holding, then I will stick with the bullish idea for the moment. So let's see if we can get a 1460 hold and a break above 1486 again. And it's just a matter of kind of working on a series of 1-2 waves, and before we get a an acceleration higher in a third wave. Okay, so let's move on to crude oil. Crude oil, again, we're pushing to a new high today, but it's only very slight. We seem to be attracted to that 78.6 retracement level. We're not there yet. We're kind of we're caught between both of those Fibonacci retracements. Not entirely sure we'll actually get to that 78.6, but the market seems to be attracted to that 60 level, and you know, who am I to say that you won't get there? We're quite close now. We're 59.60 trading this morning, so let's see how the day goes. Internally here, I'm counting this. That's wave one, the wave one low there back in October, and I'm looking at an A, B, C, 3 waves up in A, B, C, down in B, 3 waves down in B, and then a possible ending diagonal, 1, 2, 3, 4, and maybe working on wave 5 now. In general, the market doesn't look healthy. The price action doesn't look healthy. You can say that for gold as well, I suppose, but the kind of the light at the end of the tunnel for gold is that the correction has been to the downside rather than the correction over the last 3 or 4 months has been to the downside rather than a correction to the upside. This is a pretty it's a complex correction, but it's a pretty noticeable correction nonetheless to the upside, and I think it'll be retraced completely once wave 3 down begins. Okay, so next week again, I'm just going to be looking for a completion of this wave 2 and the initial moves down into wave 1 and 2 of a larger wave 3. Okay, the S&P, here we are again, a new high. A new high is not a bullish high. It's it could not be more bearish, to be honest. I couldn't be more bearish, and I have been over the last year a perma bear. The funny thing about it is, you know, back in 2015 when we had that kind of real strike to the market back in, do we have that here? Yeah, we had this kind of a real lull in the market, real impulsive moves down. I was a super bull back there in 2015. I don't know if I can pull up those old videos, but yeah, I was way bullish, and here I am, you know, 4 years later, and I could not be more bearish. And I remember back in 15, people on the YouTube comments, the old ubiquitous YouTube comments, people were telling me I was an idiot to be a bull, but there you are, you know. 4 years later, we're still creating a top. I didn't think it would go on for 4 years, that's for sure. But nonetheless, here we are, wave 5 of 5. Okay, so we have the daily chart. That's the fourth wave low back in January 19, and we're moving off that in a fifth wave, and we're topping in a fifth wave. I don't have any reservations about saying that at all. Okay, so within that fifth wave, we have within wave 5 red, we have 5 clear waves in blue here. So we had a triangle fourth wave, and then wave 5 in blue. And this wave 5 in blue seems to be pretty reasonable as a 5-wave pattern itself. So wave 1, 2, long 3 wave, and then A, B, C, 4, and wave 5. Wave 5 itself seems to be pretty clear as a 5-wave pattern itself. So let's get down there into that fifth wave. Here you can see I keep having to move these damn things because we seem to keep chugging to slight new highs after impulsive declines. Okay, there you can see wave 5 in green has 1, 2, 3 triangle, wave 4 and wave 5 completing soon enough, if not today. And again, what I'm looking for is a completed impulse pattern to the downside. We haven't got that yet, but we will get it. I'm pretty sure of that sooner rather than later. We have here at 31,174, we have wave 1 in green equals wave 1 in 5. So I should move that a bit. 16, 18. So we have, go to the 4-hour chart for a second. We have this initial move up in wave 1 here has now reached equality with wave 5. So that's a pretty common end of the line scenario for an impulse wave. Okay, so that lies at 31.74, and we are sitting more or less at that at the pre-market this morning. But let's see, we have the recent highs connected with trend line there. We have the upper trend channel line there, so we might see a little bit more to the upside before we turn down, but we are as close as I think we can get to the end of a seriously long 5-wave pattern. Let's see how we get on next week. I want to see it turn down. I want to see 5 waves down. Not that I want a bear market, but you know, the market needs it. I think humanity itself probably needs it to kind of reset. And yeah, let's see if we get that next week. I had an interesting thought this morning popped into my head. Do you guys remember that the Occupy Wall Street thing that happened back in 09, 10, 11, that kind of time frame? That Occupy Wall Street, where they went in and they just camped and pooped all over the place. Well, that happened. You know, it happened over here as well, everywhere. But they didn't. You know, there was very little actual physical harm or damage done. Well, I wasn't there, so nobody harmed me. But I don't think the next time it's not going to be Occupy Wall Street. They're going to burn down buildings. They're going to take lives next time, and it won't be pretty. Those people are pretty damn angry as it stands. So, on that cheery note, let's move on. Okay, here's silver. Silver seems to be more building more of a bullish pattern than gold at the moment, but it's still small and insignificant so far. But we had this diverging momentum higher on the 4-hour chart here for the last month at least. Yeah, for over a month we've had this diverging momentum from the price, and the price seems to be finally following that pattern. So I think again this could be a 4th wave at one lower degree. It's hard to know on that front. We only have to let's see how this next leg up kind of plays out. But for the moment, we're kind of turning brighter, looking a bit brighter after this week's trade compared to last week. Okay, so seem to have a pretty reasonable 5-wave pattern up. Maybe we're working on a second wave right now. This could be an ABC pattern into a low, maybe at around 1675 again, but we'll see how that pans out. So far, we have 1652 holding, and I want to see a push back above this. See this wave 1 low here? That's at 1760, let's call it. I want to see wave 3 of 1 push back above 1760 again. So we should, if this bullish pattern is correct, we should be looking for 5 waves up over the next week or so. And let's see if 1652 can hold. If we get 5 waves up and 3 waves down, then that'll be a very bullish signal for silver. But nonetheless, on the short term, if we get 3 waves completed today, then next week we'll be looking quite bullish. Okay, so next week, want to see initially a break of that 1730 high there, that previous 4th wave high. And let's see if we can get a small impulse wave completed today. Let's get into bonds. Bonds have, well, this is the early pre-market, so we've got an initial move off that spike lower yesterday. I'm still calling this a 1 and 2 to the downside. The only other interpretation on this front would be if this second wave was actually extending as maybe an expanded flat. For the moment, we may as well keep it there. But it could be, you could be talking about an ABC, and then 1, 2, 3, 4, 5 to complete an expanded flat correction in wave 2. So we'll keep that in mind for next week. I'll get that. Oops. I've said it before, I do not like MetaTrader 5. Okay. That'd be an alternate account for wave 2. So if we got, that'd be 3 waves up in A, 3 waves down in B, and then 5 waves up in C. But for the moment, I'll work on the assumption that we're moving lower in a 5-wave pattern within wave 3. But this should continue lower quite quickly. If we get some sort of grind higher again today and we start pushing back above 129, well, that will strongly hint at the alternate account for wave 2. So yeah, next week I want to see a continuation lower, but we'll have to decide between those two counts. Okay, and definitely if we get a break of 129.39 again or 129.40, that will pretty much trigger that alternate count. Okay, that's it. It's kind of a stop and start video. Thanks for being with me throughout the week, and I hope all the website issues have cleared up for people. It's gone on for long enough, but until Monday again, we tackle this market again. Have a great weekend. God bless. Godspeed. Be good. Bye bye.